It's separation season, folks. The deals are out there, very buyer friendly, and deals are cash flowing positive at current rates. Hoping for a fourth property by the end of the year. Let's go.
You have to know where to look, how to look, what to look for, and you'll find the deals, right? Any deal, just so you guys know, I've been investing in real estate for 24 years. What's up, guys? Welcome to another episode of the Vacation Rental Revolution podcast. I'm your host, Shawn Moore, and we got a Whiskey Wednesday segment with Mr. Dave Savolich. What's up, buddy?
How you doing?
How we doing? Good. We're those of you that are avid listeners, you know what this show is all about. These are short, sweet, to the point episodes where we cover a couple things going on in our world. Dave always has a couple topics that are hot in the short-term rental world, and then we answer some questions that you guys send in. So if you are new to these episodes, or if you're a listener and you've been around for a while, make sure you send us in those questions. We're getting some good questions sent in via email, support@vodacy.com, and or you can post them in the comments on whatever platform you're watching or listening on. So always as a reminder, put those questions. And like I told you guys an episode or two ago, that's my favorite part. So let's what do we have? I'm always curious on the first part of the show because it's either going to hook people in or they leave us. And sometimes
they're going to be so hooked into this one. It's unbelievable.
Okay. Well, I'm excited because wait, our sponsor.
Yeah.
Right. This is an old Shanky's Whip Ireland whiskey. It's not a whiskey. I thought it's like a liqueur. Like it tastes a little bit like Kahlua, but this came from our buddy Jim. You just went and spent a little bit of time at his lake house and had a good time.
That was in Delavan Lake, Wisconsin.
Yeah.
I got a good friend. You and I both, friend of ours, spends a little time in Alaska with us. And my family went out and stayed at his lake house, and he had a bottle of that, and it's kind of unique, interesting. He's like, "Why don't you take that back to my buddy Shawn and let's sponsor the old whiskey Wednesday with a little Shanty's Whip."
Shanty's Whip, made in Ireland. It's a little dark. I mean, it's got a bit of a. If anybody, like when I tasted it, it's got a little bit of a Kahlua-esque kind of flavor to it, doesn't it?
Yeah, it almost looks like Coke Zero.
Yeah, dude. I mean, you could get away with that one.
We're both pounding it today. Let me get a quick one before we go.
I'll get a little sip of that.
Mm-hmm.
It's just like a little dessert, It's like a dessert
just
drink.
like a Coke Zero.
Just like a Coke Zero. We'll switch glasses, and then we'll see how this episode goes.
Exactly. Well,
okay, let's dive in. Sorry, I didn't mean to interrupt your intro.
Love that. Super excited about the intro today.
Okay, I know you keep saying that. You won't tell me what we're talking about
this Whiskey Wednesday, and you and I have had a lot of strategic conversations over the last couple of weeks, and as you know, we have a passion about supporting our members, and most importantly, we care about their success. I know on our conversations and calls and with our strategy coaches, one of the things that we really, pride ourselves on is we care about your success. We want to support you. We want to help you. And so I think it's unbelievable. And I pulled these direct, and I'm going to read these. This is going to take me a minute, but I pulled these directly off of our school community.
Right.
That's our Vodacy school community. These are our members. Now, the most amazing thing about this is this literally was in the last 4 days. So from Saturday to today, Wednesday, in the last 4 days, this is what they posted in school. So I'm going to read through some of these wins and these successes. So first, we're in escrow in South Euclid, Ohio. We're under contract in Gatlinburg, Tennessee. We went live in West Michigan. We launched in Nashville, Tennessee. We're up and running in Lake Cumberland, Kentucky. We're under contract in Branson. Finally listed in Hocking Hills, Ohio. Under contract in Oakhurst, California. Bourbon Trail property is live, Frankfort, Kentucky. First short-term rental under contract, Cape May, New Jersey. We're live in Columbus, the House of Brutus, Ohio State, Columbus, Ohio. We just went under contract on our third property. It's separation season, folks. The deals are out there, very buyer friendly, and deals are cash flowing positive at current rates. Hoping for a fourth property by the end of the year. Let's go. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 members just went live or under contract in escrow, just got their property. I mean, that's amazing.
It's awesome.
That in itself is like a tribute to what we do, but also the commitment and the priorities of our members following a process and following the blueprint. I don't think I've ever seen that many in a short period of time, and they just keep coming. So like, what does that say? One, we have an amazing blueprint process, but two, we have committed folks that are out there, but three, like, it's a great time. Yeah. It's a great market. It's a great time to buy. Like, don't let outside forces keep you from achieving your goals and your dreams, because all of these guys did it. Yeah. It's amazing.
It's awesome. And that's really exciting to read. And I think that as you were going through it, right, I'm just like, this just reiterates what we've been talking about for a long time. And everybody's like, hey, golden age of short-term rentals is over. Oh, you can't find deals. Prices are too high. Interest rates are too high. There's just not deals out there to cash flow. I mean, well, you just read off 12 in 4 days that underwrite really well, and they're going to do amazing. And so people are out there making it happen, right? And, I've been really quiet on social media the last month or so, sort of on purpose, sort of not on purpose. We're diving into some things internally where that our focus is always on fulfillment with our members, doing the things that we do inside of our group, not outside of our group on social media. I'm way more private than a lot of people are out there. But what bothers me about social media too is this message of it's really hard to do this. You can't find deals. The deals are there. Like the one message that you read from one of our members, guys, the deals are out there. Get after it. Start looking. You have to know where to look, how to look, what to look for, and you'll find the deals, right? Any deal, just so you guys know, I've been investing in real estate for 24 years. There's never been a time in the 24 years that I have been working in real estate and investing in real estate that the deals were wrapped up in a pretty bow and said, this is the best deal around. You always have to know where to look, how to look, and what to look for, and how to recognize the deal. So when you learn that skill set and you're able to implement that, the deals are there, and they're there in any environment, in any market, and you just have to go make it happen. And that is exciting. It's exciting to be around that many people that often, right? It's, in 4 days, you got 12 properties under contract in an escrow in our Odyssey community. That's awesome, right? Every single, it doesn't matter what 4 days you go to that you pick. You randomly pick these 4 days because this was leading up to our conversation today. But it doesn't matter when you do. You go into that community, there's people making it happen. You go on social media, there's a lot of people bitching about what's going on, right? The American dream's dead. You can't do this. You can't do that. Prices are too high. Interest rates are too high. Well, go make it happen for yourself. Go figure out how to leverage the environment we're in and figure it out, because there's people doing it. There's people building lifestyle, financial freedom on a regular basis. It's what we talk about all the time. And it's that instead of looking at what everybody else is saying and why you can't do it, they're figuring out ways to do it. And it's really fun. And you're right. It says a lot about just the people that are in there. They're the doers, right? They're the people that are willing to roll up their sleeves and get to work and get stuff done.
Well, and I'm just so proud of these members that have committed to doing something. They're taking advantage of the opportunities that are out there. And people will say, well, it's, I don't know which market, and certain markets don't work. And there are always markets that don't work. But I mean, we're in Oakhurst, California. We're in Cape May, New Jersey. We're in every state in between, from Kentucky and Ohio and Tennessee.
Exactly.
And, we're all over Branson. So there are markets that are amazing, and it's so much fun to see these, members and these people that have decided to commit to this to be successful. And the other great thing is, and I go in and they post their listing, and I go in and I look at every listing, and they're creating this amazing experience in these properties, and they're going to create demand, and they're going to maximize their property. And it's just, it is so much fun to see. And I just, I was just so excited about this week's, because I wanted to share all these wins of all these people, and they're real people and real, guys just like you and I. They're out there just 9-to-5ers, and they're committed to doing something great with their life.
Yeah, absolutely. So, it's awesome. That's super exciting. It's so fun for us to see. It's why it's you and I talk about this on a regular basis. Off of the microphones and camera and everything. Just how fun it is to be around people like this, like on a regular basis, right? When you're around that kind of positivity, that kind of people who take action, willing to go to work, you don't pay attention to the bad news. Right. You're like, hey, listen, we can win despite of what's going on. It doesn't matter. Like, we're in an election year right now. It doesn't really matter to me. I mean, I want a certain person to win, and I'm going to vote accordingly because I vote for policies. But I don't care one way or the other who wins. I'm going to make it happen regardless. Right. I mean, in whatever environment we have to deal with, we're going to deal with that environment because there's going to be opportunities in every environment.
Yeah, for sure. Well, good. Well, let's jump into a couple short-term rental, kind of trends that we're seeing right now. There's a couple of trends that come out, and I want to kind of mention, there's 4 of them I want to kind of talk about because I think they're super interesting and they're part of the goals and kind of the strategy as a short-term rental investor. But also, I think there's 2 things before we talk about that, 2 things that I think, we've been talking about for a long time now, for probably a couple years. But I think a lot more people now are getting on the bandwagon and kind of talking more about this. Is 2 things that you shouldn't underestimate in short-term rentals. And the first is the passive income creation through equity and appreciation of a property. So that's the first one. We'll dive into that. And the second one is buying properties in politically friendly areas. So whatever your political belief is, don't really care. It's, making a business decision and putting a short-term rental in an area that's more friendly to your investment. So let's dive into both of those a little bit. So, creating equity and appreciation in property. I mean, we always talk about tax advantages and passive income. I want a monthly check, and I'd love to create a lifestyle asset. Those are all amazing and absolute awesome goals. But I think a lot of people underestimate the appreciation and equity of a property.
100%. I think it's by far the most underestimated wealth building lever in real estate is the actual appreciation. And the note pay down is huge too. You get somebody paying your mortgage for 10 or 15 years. That's a big deal. Somebody else is paying off your property, paying off all that interest, right? Like right now we're in a high interest rate environment, right? We were in a really low interest rate environment in the past. And if we're at 3 or 4%, everybody's like, oh, that's no big deal. If we're at 7 or 8%, everybody's like, man, that's too high. Well, at the end of the day, if you have a real estate investment, somebody else is paying that interest, right? And so does it affect your ability to cash flow? Everybody focuses on cash flow. And it's why you will never hear me talk about and support arbitrage and co-hosting, because it has that major lever of appreciation and tax write-offs and the note pay down. Those 3 major things are huge wealth building levers, right? But the appreciation is huge and the leverage on the appreciation is huge, right? And everybody's like, well, you can't plan on that. Well, you can, right? Yeah. Over a 100-year period of looking at real estate, it's about 5.5% on average, right? And so it's pretty stable that you can kind of bank on that. And there's times where it's better, it's times where it's worse, but also real estate is very regional as well. There's areas that appreciate better than other areas. And why you always hear me talk about quality assets in quality areas, right? Quality assets in quality areas are typically going to appreciate better. And I would lean that way versus a cash flowing asset. A higher cash flowing asset is typically going to be, there's an inverse relationship between quality and cash flow. And the reason I mean that, I'll give you an example of it. Like if you're a slumlord, right? If you're buying in the ghettos and the war zones of the US, like the worst of the worst neighborhoods, and you're the slumlord, those slumlords typically have very, very high cash on cash returns typically, because they have to, because that's their only reward to go invest in those areas is a high cash flow. So they're getting 25, 30% cash on cash returns. You'll see people buying $50, $60, $70,000 houses and then renting them out for $800 or $900 or $1,200. And they're making these huge cash flow returns. But those properties 5 years from now are going to be worth, if they paid 50, it might be worth 52 or 53, right? They're not gaining that much. And they're also, they got to get paid for a lot of the issues they have to deal with, right? Yeah. The higher quality asset you get, the lower your cash flow goes down. But if you can break even on a really high quality asset and that thing's appreciating at maybe a little bit better than the average of 5, well, let's say you're at 6 or 7%, that's a huge benefit to you over time, right? And I'll give you an example of that. And I say this because everybody talks about cash flow and they chase cash flow and we hear it all the time, right? And I think you're right on the money where you say the most overlooked aspect of real estate investing is the equity and the appreciation that you're gaining over time. And it's not necessarily adding to your passive income. It's adding to the wealth building aspect, right? Your net worth on that property. When you ultimately sell it, refinance and pull money out, there's a big chunk of change there and it's a great return on investment. So if I've given this example before, I'll do it again. $500,000 property. I put $100,000 down, right? I put 20% down. If that property cash flows $5,000, I made a 5% cash on cash return, right? I made a 5% cash on cash return. Great. I'm getting a 5%. So a lot of people are like, I need to make 10, 15% cash on cash, or I don't want to do it. And I say, okay, great. What else are you going to do? And they'll say, I'm going to put in the stocks because I can get 9 or 10% there. I'm going to put it in Bitcoin. I'm going to get 12% there. Okay, great. If that's what you want to do, right? First, stocks they're not giving you that cash flow. Most stocks are not dividend paying stocks that most people invest in. It's going to be a paper gain, because they'll argue, well, that's just, your appreciation is just paper gain. Well, so is your stock gain until you sell it, right? You don't realize you're gaining stocks until you sell it either. So don't talk out of both sides of your mouth. First of all, decide. And I'm saying this, don't talk out of both sides of your mouth to yourself. Like when you're showing yourself what you want to do and making that decision is, okay, I've got $100,000. I'm chasing this 10 or 15% cash on cash return. And stay with me because I'll try to land this plane here. So, and I say that's what I want, right? But maybe in order to get that 10 or 15% cash on cash return right out of the gate, I've got to go in a little bit worse area, right? Maybe it's not going to appreciate as well to get those bigger cash on cash returns. We want a mix of both, because if that same property, that $500,000 property, and this is where the power of leverage and the power of appreciation really is I put 20% down, my $100,000 in this property. Let's say I broke even on the property. Like I didn't make any cash on cash return.
Yep.
And that property, that $500,000 property went up 5%, just went up the average. Didn't go up because it's in a better area or anything else. It just kind of went up on the average. That property gained $25,000 in value.
Right.
So my money, my $100,000 just gained $25,000 in value by that property going up 5%. That's a 25% 25% return on investment into this property, right? That's huge. It's hard to get a 25% return on investment in stocks. It's hard to get that in other, even if it's like Bitcoin or whatever else. You got these big swings, and you just got to try to time those swings, figure out how to deal with those swings. They're too wild and crazy for me. So I don't want to even talk or even act like I understand Bitcoin as an expert by any stretch, because I'm not. But on real estate, it's a very stable asset. There's not big swings in real estate. You don't get big swings in real estate. We've seen a couple big swings, and we just recently saw one, that COVID swing, and it was a spike up, right? We normally don't have those types of spikes up either. It's a very stable asset class. And it is because it's not a super liquid asset class. So, if there's bad news, you don't have everybody throwing their homes on the market and everybody sells like they would on stock, right? You'll see a lot bigger swings in stock market because you hit the sell button and if there's something goes wrong with a company, the earnings aren't there or whatever else, you'll have a whole bunch of people or a bunch of funds that will sell. Real estate's fairly stable because everybody doesn't rush to sell at the same time, right? There's reasons we keep real estate. But that return on investment over a period of 5 years or a 10-year period, and you're going up 5% steady every single year, you look back after 5 years, even if you had a break-even property and you completely ignored your cash flow, it's a very significant return. If you're getting 25% return every single year, and then that starts compounding,
right?
It's
a big deal.
It's a huge deal, right? That's why you see these huge IRRs on stuff, and it's a big deal at the end of the day. And I think that there's too many inexperienced investors that have not realized that. And most people, if you think about it, think about your own house. If you own a home and you look back over a 5-year period, was that a good investment? Like, how many people say owning a home is a bad investment? Right. I hear that all the time. That's owning your own home is not a good investment. Put your money somewhere else. I disagree. It's an asset that you're paying for. You're paying living expenses somewhere. Yep. Why not pay for your own living expenses and own the asset?
Absolutely.
Right.
Yeah. Good. So let's talk about the kind of the second part of this where we underestimate is owning properties or buying properties in politically friendly areas, and the reason why we want to do that.
Rules and regulations, right?
Yep.
Period. Right. There's two sides of the coin on the political spectrum, and there's certain sides that are going to be more favorable to business owners, to homeowners, to landlords, all of those different things and they're going to allow us to be a little bit more be able to do a little bit more what we want to do with the properties, and also be able to remove those people if they're not doing what we want with the properties, right? You go into very conservative areas, Republican areas, and you're not going to have a problem evicting somebody typically, right? If somebody is not paying you, you're not going to have a rule that says, sorry, you can't kick them out. You go to a very liberal area in a lot of Democratic areas, it's hard to get somebody out. I mean, and that's a really cut and dry, like, why would you not want to do that? Well, on the 10% chance I have somebody squatting in my property and I'm paying a mortgage on it and I can't get them out, and the state's saying, hey, sorry, you can't kick this person out, without doing all these different things and letting them sit there for a year or two, and they know how to play the system. Well, for me as an investor, I'm not sitting on $1 billion. I need to make my mortgage payment. And so I need to be in areas that if there is a problem, I can move swiftly enough to get them out. And there's laws to protect me to get them out. And there's laws to protect me as the landlord versus them as the tenant and somebody that's in there, right? And squatting in our properties. That happens. Doesn't happen often, but when it does, it can be devastating if you're in an area that doesn't allow you to get somebody out, right? And so all of a sudden you've got an asset that you're paying a payment on with no income potential because the area in the state is saying you can't do it. Now, that's just one example. And but that you'll find there's a whole bunch of them though. There's a lot of different reasons why that we want to be in areas that are going to be more pro-business, pro landlords, like people that are willing to go out and invest in housing, invest in development, and they're able to capitalize on that. And because they allow us to capitalize on it, it attracts better quality properties. It attracts better quality areas for people to live in, to enjoy, to use. And they don't have the rent controls and all this stuff that you'll see in these other areas. Like, I shouldn't, in my opinion, if I'm going to go, they don't put a cap on what somebody can charge me for a property, but you go into some of these areas, you buy an apartment complex, you go buy a property, and they're saying, well, you can't charge more than X. Right. It's illegal to charge that person more than X for housing in this area. And to me, that just doesn't make sense. If there's people with more money and maybe a bigger heart than me, whatever they want to claim it is, that I'm this greedy landlord, it's not that. The majority of landlords are just everyday people like us.
Well, and it's important too, because I think whatever your political beliefs are, this is your investment. And so you buy it as an investment to make money or to, create some income or some future real estate potential for yourself. And so if I buy something and I want it to do well, I want to put it in a situation where I can be the best at it. So if I'm putting it in an area where there's lots of rules and regulations and challenges, that's going to be bad for my investment. If I put it in an area that's going to be good and support and is positive for that, that's exactly why I'm buying it. So whether your beliefs are politically one way or the other, your investment should be put in a place where they're most friendly. And typically that's in areas that are more politically friendly than others. So,
yeah. And just like a great example is look what we're doing and dealing with bonus depreciation, right? They've been phasing it out. This administration's been phasing out bonus depreciation. Well, you're taking away one of the big incentives for investors to go invest in properties, right? There's a shortage of housing out there, and there needs to be an incentive for people to build more, to develop more, to invest in more properties. Like, that's good for the economy overall, and it's good for everybody, from top to bottom. And the majority of the people who do those investments, like I said, they're average everyday people like us. America needs those people to be investing. Well, we need to have those incentives to do so and not have somebody's thumb on us saying, hey, you can't do that. And because when there's no incentive to do it, we'll go do something else. Yeah. We will go produce in other businesses, or we'll go do something else. Well, that hurts the economy overall. And so, I just, it is what it is. I mean, you can, I've always said, like, you should vote policies. I think the other problem is everybody's voting for people right now. We're like, I don't like that person, I'm not voting. I don't like this person, I'm not voting. You shouldn't vote for people. You should vote for policies, period, right? And that's why, and I choose to invest in certain areas with certain policies, and they're going to be more favorable for me as an investor, period. And I'm not going to apologize for that. And I think that we have a lot of people. You just mentioned areas in California. I won't invest in owning properties in California, and because I don't like the policies there. But we have hundreds of our members that have beautiful properties, high producing properties in California. Yeah. It doesn't mean because I say I won't go there, you shouldn't go there, that it's not investable. It means that I want to stack the odds in my favor should there be a problem, right? I'm always, at this stage in my game, I'm super conservative. I've had people in the 24-year span that I've been doing this I've seen about everything. I've had people squat in my properties. I've had people that aren't paying and that we have to get out. It's not all the time, but it happens. And if I buy a really nice property in an area and somebody squats and it's going to hurt me financially, and I say, okay, am I willing to take that risk? At this stage in my career, I'm not willing to take that risk.
Well, and through your experience, you learn that you're gonna try to stack the odds in your favor.
Yeah,
and so
that's all we're doing. We're mitigating risk.
If you've been down that road, you're like, hey, I don't want to go down that road again. I'm going to do this because I know my risk is a lot less over here.
Yeah.
So
and more people are talking about this.
Yeah.
And I think that's why you brought it up.
Exactly. I've heard
it's
it
not
on
just
social
us
media
talking about it
several times this week about, hey, listen, this is your investment. I don't care what you believe in, but you ought to
watch
invest
your money
in certain areas.
Mitigate your risk. There's no investment that's guaranteed, period. Right. And so you want to mitigate your risk as much as possible. You got to mitigate risk on the rules and regulation side as well.
Yeah. Okay. All right, great. Well, let's move on. Let's talk about a couple trends. There's 4 kind of trends, and I don't know if you call them trends, but they're more, I don't know, kind of short-term rental topics that we should be aware of and mimic and just make sure that they understand kind of what's going on in the market. So the first one is authenticity. Travelers are looking for more authentic experiences that connect them with local communities in the environment. So they want an experience. They want culturally. They want to feel like they're a part of the community. I know on our previous Whiskey Wednesday we talked about, Paris and really promoting, a commercial for Airbnb to stay at an Airbnb and really experience the culture and don't just be a tourist. And so that's kind of the idea behind it. The second is the hospitality. OTAs are using AI and machine learning to match guests with properties instead of overwhelming them with search results. So, if you're looking for cabins online, you're just going to be bombarded with a lot of cabins. And so AI is getting an idea of, hey, this guy likes cabins. Let's throw the best cabins at him. The third one is demand. Demand for short-term rentals continues to increase, which we like and which is a good thing. And investors need to adopt to provide the best experience for their guests. So we talk about that a lot. We've been saying that and we've been really teaching it for years. To create that experience to play in the top 10, 20% where really the money's made, but making sure that investors are adapting and creating an experience. And then the fourth is occupancy. Occupancy levels are approaching pre-COVID levels since 2019. So we're seeing it level off a little bit, kind of getting back to normal and being able to adjust as owners to that new level that's there. Even though short-term rentals are increasing, we've seen all the numbers. It's kind of leveling off a little bit. So
yeah, awesome. And I think that, like you mentioned, trends. Like the AI is a trend. The other things are pretty much just fundamentals, right? We talk about we are in the experience economy. That's what we do, right? We're selling experiences, and an authentic, localized experience is a great experience to deliver, right? Those two go together, that authenticity and the local flair and bringing the where you can go live in an area like a local and experience an area like a local. That's all part of the experience, right? And so the better we get at delivering the experience, the better we adopt we are and really accept the fact that we're in the experience economy, not the property economy, right? Mm-hmm. We're not selling properties. And the more that we're going to get paid, the more that we're going to maximize these assets, the more that we're going to maximize these investments. We talked about this over and over. We don't need to beat that horse dead, but it is one of the big levers you can pull, right? When we talk about the 3 fundamentals of this business, that's one of the 3 fundamentals. So that is not a trend, and it hasn't been a trend for a long time. That's the business we're in.
Right.
I think that what happened is we had such a spike post-COVID, and that added fuel to the fire of the popularity of short-term rentals. And everybody felt like now, like short-term rentals became a trend in the hospitality space, but they're very mainstream and they're here to stay now. So when anything is mainstream, when anything is, here for the long run, there's fundamental aspects of the business. Experience and the authenticity and all that's never going away. That's a fundamental aspect of this business. And so you really have to say, hey, if I'm going to be in this game, like I better realize that's not a trend, right? That's not something that's going to come and go like that. And they do talk about it as a trend all the time. When we read these blog articles and these reports and what's trending in the short-term rental market, there's something that has to do with the experience. Well, that's not a trend,
right?
When it's a fundamental aspect of the
mainstream,
business.
Right.
That's here and that's here to stay. That's not going anywhere. Occupancy, right? The occupancy is is settling back down. We are in an area where most of these properties are in markets that are seasonal, right? There's preferred time of the year that people like to visit these markets. And so you have occupancy levels that are going to hover around 50 to 60% in most markets. I mean, it's not going to be most, the majority of markets in the short-term rental space, and every market's a little bit different. So don't, but on average, you're going to be 50 to 60% occupancy. That's a normal level because most of these markets are fairly seasonal. And everybody panics that they're not at 80 or 90% occupancy, or during the shoulder season, they're like, man, I'm sitting at 10 or 20 or 30% occupancy and nobody's booking my property. And it's like, no, you need to learn how to maximize the busy season. You need to learn how to maximize the 50 or 60% of the time that they're in, which is when they are willing to pay more, typically, right? Because during your peak season, your occupancy should probably be closer to 80 or 90%. But overall, when you're looking at it across the board, it's going to be 50 to 60 because you're going to have months that you're at 20% as well. And so it's maximizing the time somebody's staying in there and understanding that you're going to have those times that you're going to have to roll through. And, you might get a little bit of money, but that's not when you're going to make the majority of your money. And I do think that that's a mistake people make right now. And in the short-term rental game, and they're still trying to figure it out, is you need to quit worrying about your shoulder season, quit worrying about the slow season. That's not when you make your money. You make your money by maximizing your peak season. And so how are you going to do that? And that goes back to that experience we're talking about, right? Understanding how to pull that lever and really maximize the experience you're delivering. And then you will maximize the dollars you make during the peak season. You don't have to worry so much about, that your average occupancy went from, during COVID of 75 or 80% down to 50% because we're back to normal levels. It's like, hey, you should be able to make money at the normal levels as well. Right. And then the one that I do think is a trend, and it's going to continue to evolve, is the AI, right? It's the OTAs. I mean, the AI is expanding and moving at a rapid pace. The machine learning just continues to get better and better and better. And machine learning, what it does is it feeds our biases. We know that in social media. We know what we're talking about is going to show up on our phones the minute we're done talking about it, right? Like you and I have a conversation about something, it's going to be on our feed. And that's just AI and machine learning. The OTAs are doing the same thing. The thing I like about it is it feeds our biases. The thing I don't like about it is it feeds our biases, right? We're never exposed to the other side of the coin. We're never exposed to, something new because they know that, hey, listen, if Dave likes cabins and I show him some of the coolest cabins, he's more likely to buy if I'm showing him the things that he's interested in, right? So from a business perspective, I don't think it's ever going to change. From a user perspective, I like to see new things once in a while. And so I have to understand that maybe I have to search some different things at times because I'm not going to just see it in when I'm on those OTAs because they're going to show me what they want to show me. The same as Instagram shows me what they think I want to see. Facebook, TikTok, wherever you're at online, YouTube, it's going to show you what it thinks you want to see. They're going to keep feeding your biases, right? And so, I think I think that can be a good thing. It can be a very efficient thing when you're trying to shop for something or you're trying to look for something. It can be a really bad thing because you're never exposed to the other side of the story, right? Yeah. I mean, look what happens politically and look what happens in our world when it comes to those types of things. It can be very divisive as well. So you just have to be careful and understand that that's out there. It exists. It's always going to exist. From a very capital perspective, as a money-making perspective, the OTAs, the Googles of the world, the Instagrams that people are running ads, they're never going to go away from that. And they're just going to get better and better at feeding those biases. But as a consumer, you have to realize, hey, maybe I would like to see both sides of it.
I want to see a little bit of both. Yeah.
And so, that trend is something that it's not going anywhere, right? And we've been seeing it evolve right before our eyes at a very rapid pace. And there's things that we love about it. And there's things that maybe, the grand scheme of things, kind of those unintended consequences, right? It's there, but because we only see one side of the story, we just draw a deeper line in the sand almost, instead of saying, hey, maybe I want to hear the other side of the story. Maybe I like beaches instead of mountains and all they're showing me is cabins, right? Whatever it is.
Yeah. Well, good. Well, we had a lot today, buddy. I appreciate it. It's good conversation. That was a lot of content, We're going to
cover a lot of ground. Yeah.
We're going to wrap up today. We're going to keep the questions for next week. Okay. We appreciate you guys sending the questions in. Keep sending it in, but we're going to wrap up today and keep it kind of short. We had kind of a little bit of a longer one today, so we'll We'll dive into the questions
out.
next week. And again, thanks everybody for coming, and we'll just wrap up.
Okay, let's wrap it up. So
All right.
you guys, we always appreciate your time, and so keep the questions coming. I'll make sure that I get a little bit not as long-winded next week, so that we can answer a few of those questions. And so we'll make sure that we there's things that you guys want to know. There's things that are on your mind. Post in the comments on whatever platform you're watching or listening on, or send them into email. Send them into support@odyssey.com, and we'll make sure that we get them on a list. And we do enjoy those questions coming in. We want to talk about the things that you guys want to talk about and that you want to hear, and that helps us stay on topic there. Because I know that even some of the questions they send in, it spurs some of the topics that we're going to talk about, right? And so keep them coming. And if you know anybody that would like to be a part of these conversations, we always ask you that favor at the end of the show to share it. If you have more than 30 seconds, like it, review it on whatever platform you're watching or listening on. And if you got friends, family, somebody you know that wants to be a part of these conversations, share the show. Those things help us a lot. We don't run sponsorships or ads on this show, so the only way we grow is if you guys share it. And the final, most important thing that I ask you at the end of every episode is pick that one thing you can do today, start building that life you don't want to take a vacation from. Cheers, my friends.
Cheers, buddy.
Cheers, buddy.